Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the S&P 500 just on a 15-minute chart actually, just to see the retest of the 1400 there, because as the S&P is working through the 1400, the Dow Jones is working through the 13,000, the FTSE is working through the 5,800, and our local market, the 4,400. So we're basically looking at all of these markets in their own way, working through their closest, largest numbers. Now the S&P 500 is sitting on the 1400, which is good. The Dow Jones is under the 13,000. So they're all working through it in their own little ways. But what we wanted to point out is that these retests that are moving down to check these numbers, in this particular case, is corrective price action. So we should see further upside. But in saying that as well, when a market first arrives at these sort of large numbers, they start off with smaller reactions and they build up to larger reactions, and then they settle down, and then they'll find support on these numbers. So there is a fair way to go through all of this. So I was hoping yesterday with the US markets moving, 1 1/3% to the upside, that the Australian market would have moved further to the upside as well. And I thought we could get some long trades in a strong move there and get a bit of grounding on that, but that wasn't the case. And now we're kind of got the price in the US and the European markets at these large numbers. So it's kind of a bit of a stalemate, really, a sort of a rock and a hard place. But the point is that there will be larger corrections at these numbers. However, the bias, according to Elliott wave, is still to the upside. So we're still looking forward to the upside. It'll just be edging to the upside with corrective patterns. So you really need to be, in terms of tactics, you really need to be up close trading shorter time frames, or you stand back and allow the market room to move. Okay, so with that sort of said, this is the S&P 500 here at the 1400 here. So basically markets are trends and corrections of different degrees. So we've seen this trend up through here. It hasn't really been corrected as such. Yes, it can push higher, but it's only into, if it finds support on top of 1430, then psychologically it separates itself from the closest largest number, and then it's free to go to the upside. So we can expect corrective patterns within this space here, and that would be the same for the Dow Jones as well. I'm not that organised this morning with the chart, so so the Dow Jones here is the same pattern here as the S&P 500, just that it's under this level here at the moment. So it'll go through a series of reactions and so forth. So we just really need to allow that to play out. So I guess it's a time to sort of be long, but reduce your position sizing, and this would be the same for the FTSE as well, which has a strong relationship to our market, and is working across the 5,800 here. As you can see, it doesn't have support on the 530, the 5,830 rather, the top of subgroup 1. So while it's in subgroup 1, it's still a part of the 5.8 here. It does appear that we've got, this would be the first leg down. So we basically expect an A and a B and a C wave across here, but once it's got support, then we can see further to the upside. So, in terms of trading to the levels, we'd always trade to the number here, get out, wait for the, we just wait for the correction to occur, really. And the classic trading levels pattern is the arrival, the reaction, the first high above the level, then the corrective pattern unfolding, then we look for support, which is really part of there's many roads to Rome and many ways to see the same thing. So in Elliott terms, you can see it that way as well, in terms of the third, the fourth and the fifth, and then the A, the B and the C unfolding. And this could come further down here, by the way, as well, because we've got, we're looking for 5 waves up through here, and they may be in place now. So we can expect an A and a B and a C, but all the markets are having shallow retracement level. They're all got their fingers crossed for a hopeful resolution for not only the Greece situation, but also the American financial cliff. The Australian market too is pretty much doing its own thing in its own way, but what we are seeing is we're seeing impulse waves to the upside, and we're seeing corrective waves to the downside here. But once again, we're still within Group 1 here, 10, 20 and 30, so we don't have support on top of the 30. So that means we're still working with this number here, the 4,400. So that, you need to be, aware of that. And yeah, so not much you can really do, really. If you get support on the 44.20, that's the pivot within Group 1, then you've got half a silly chance to move to the upside. And you can scale in there, but you'd still need to wait for support before you could build in to that side there as well. So just on this, the base metals, the US dollar index is still moving to the downside, which would, and we still expect that to continue to the downside, which would support base metals, the copper market being quite central to them all. So the metals market overnight were quite steady and positive in some cases. Nickel was weaker, but the other ones were steady and reasonably positive in relation to what the stocks had been doing. More positive than stocks. So so there's that sort of pulsating thing to the upside for the Australian market, and we're certainly seeing that in the Australian dollar as well. And as you may know or recall, that we use the Australian dollar as a bit of a lead indicator, even for the US markets as well. We are seeing strength in the Australian dollar. So let's have a look at some of those commodities. Okay, this is the LME copper. We normally look at the US dollar, the US copper, because it's the last closing price, and that would have more of an impact, even though this market may be larger. But I just wanted to point out here that pretty much just the triangle pattern really that's occurring, and it's the same pretty much in the US market as well. So we've got this sort of thing happening through here, and a triangle is a corrective pattern, it's a continuation pattern, so we should see that to the downside. And with a triangle, it's normally 5 waves, so like 1, 2, 3, 4 and 5, and then it folds to the downside. In Elliott terms, it's labelled as an A and a B and a C and a D and an E wave there, and each wave structure would be in 3 waves as well. So as you can see, this one here is in 3 sort of major waves, this one here is in 3, this one here is in 3, and this is what we're kind of expecting here as well. So probably wouldn't see, the supply is up around this area here, so we may see it up through here, depending, because some positive news can come out from the fiscal cliff or the wherever, whatever, so we may see it push up above there, but we also need to be mindful that it may only be a short thing there. Each in a triangle, it's normally a 61.8 retracement level for each swing, but you can see this is more like the 78.6 or something, and it could also be 50 as well. So it's not, it's always better to work to the numbers. But we are in this little sort of rally here, so we are working through a corrective rally to the upside there. So taking that point of view. Here for the US markets, that's the sort of triangle here on the sort of daily for this market here, and working through this section here, we'd be looking for some type of move in here before we see it failing. Now, it may only sort of come up into here somewhere. The 61.8 retracement level would be in here somewhere. Into this little area here, anywhere from the 358 all the way through to 365 here would be a reasonable thing there. One of the main points here, apart from all of that, though, is just taking it step by step, and one of the important things is the support on the 350 here. So this is just the daily here. If we can just find a small, here we go. So the support, what we were looking for here when this moved up through here, we knew that there would be some type of correction across there, as above, same below, and it's worked its way sort of nicely. So it's got a bit of support here now, and that's kind of positive really, because it's, you know, obviously supports the material sector. And if we have a look at US BHP, we're still working with the magic 72 number here, but we see last night's trade is closing up. Tuesdays in a bullish weekly cycle normally is down in the first session and up in the second session. That's if we had a strong Monday, because we would see Tuesday as a bit of a profit-taking scenario, and then the trend resuming on the Tuesday afternoon. But Monday was quite small. We were up yesterday, and we were up on increased volume as well. So quite at least it was a steady day as such. So we're also seeing the US dollar index move to the downside. So this is a little wave 4 here that's unfolding. We'll look at this shortly in the FX, but the main point is that this is down. As this is correcting here, rallying to the upside, so to speak, then the Dow Jones and the S&P 500 and currencies and so forth will be correcting to the downside, doing the inverse there. So looking at the gold market, also in line with stock really, I guess, you know. So we've got a couple of wave structures here. We've got up for 1 here, back for 2 here. So we're in the third wave to the upside. So we still have further to go to the upside. We'll be looking at subgroup 2 in this area up through here. But in the meantime, we're just working through a little series of 3s and 4s here, and 4s and 5s rather. So we should see we've got this wave 4, and then we've got this wave 4. So we should get another high up here to 1756 somewhere, and then look, it's just got more corrective space to go across here, so no need to rush in. You're not going to be getting any trend here shortly, so it still needs to. This wave 4 here may get more complicated as well. Here we've got an A and a B and a C, so we may get an A, B, C down to this point, then get the little wave 5 up to here to make wave 3, so to speak. Once that's done, then we'll get a wave 4, which should pull back to the wave 4 of 1 lesser degree in here or down here, wherever that may be, and then we'll see our next move to the upside. So there's still a fair bit to go through here, you know, and that's the same with silver as well. At the 34 here, 34 being a Fibonacci number, it will have a little bit more hold than normal. But once again, if I'm wrong and it does push straight up through here, support on top of the 40, 34, 30, you'll go long from there. If you're scalping, then you also use not only the 30, but the 3. So 3, 4, 3, 3 you can use to build a trade in through the 1, 2 and the 3 up that way. You go 10, 20 and 30, but then 1, 2, 3. That can be helpful if you're because it's good to buy at different prices, because as you can build a trade to in a particular direction, if the market comes back on you, you can take those trades off in that particular direction. So you're basically like sort of working with the bends in the river, so to speak. And the more sort of liquid you are, the more flexibility, and it gives you greater control over managing the risk, rather than sort of having. If you had one contract, it's very difficult to trade. If you had 3 contracts, then it's much easier to trade, because it gives you more options. Right. Okay. Let's have a look at FX. Okay, the US dollar. Not a lot to say here. Look, it's moving down nicely in the wave 3. And still has more to unfold. As I mentioned a little bit earlier, the little corrective pattern in through here is corrective, and it'd be a wave 4. It could just pop up here a little bit further before it pops down, but as we can see, it's starting to get stuck within group 1, and that's what happens when you're trading down into group 1. Normally it's a bit interesting really, because normally it would bounce off the top of group 1 there, like 90% of the time it would bounce off group 1 and come back and test the 40, and then sort of sink in here. Once it becomes, once the pivot, the 80-20 becomes the resistance, then it's doomed at that stage. But we can see that this is a corrective pattern. It's a wave 4, and that would be coming down from here, the 1, the 2, the 3, the 4, and we'll see a move further down through here, but it's still got a larger pattern to unfold as well. So eventually we'll see it as 80 as resistance. And yeah, look, while the market's working through the 80, the Dow will be working through its, the 13,000 and so on. So we'll see them all sort of, change from resistance to support in this case here. Support to resistance, and it's just navigating through the larger numbers. Okay, so the Euros is going to be doing the mirror opposite, the same wave count to the downside, practically to the upside. So here we're looking at this is just a 15-minute chart here. We're looking at a wave 4. We were looking at this yesterday as well. It just really hasn't moved here. It does look like we've got a little triangle pattern through here. Which normally occurs in wave 4, but it just something not quite right about this. So, but look, in terms of trading, then you want the 72 here as support, not just trading above it like it's done here. The breakout is important, it's part of the process, but the retest is more important. So testing the 72 is what you're looking for to create the long trade. Don't go in early because you'll be just facing unnecessary exposure, and you don't need to do that. And of course also the 130 here as well. If we just see, the 130 is really important too, because the 130 is a minor trading level, and it's also a top of minor group 1, so not a sub level but a minor group 1. So support here is critical, and what it does, it creates quite a bullish pattern from that point there. So but in saying that, we would be looking at wave 4, wave 5 to move up, which would be the top of wave 3. Then we'd see a wave 4 coming back. This wave 3 could be higher, by the way, as well. Wave 4 coming back, then we'll be up for wave 5. Now, when it gets up to wave 5, then it's going to have an ABC correction as well. So then we'll see like an A and a B and a C across here as well. So there's a fair bit of time before we get a really strong setup here again. So just be mindful of that. We have looked at the bigger picture before in terms of this structure through here. We've got this ABC here, so we should make new highs above here. So we're basically looking for 5 waves to move up through here, but those little 3rd, 4th waves are just in across here. And we can see that we've got a strong trend line coming down through here, so it's really going to hold that down, and that would be the US dollar on the 80 doing its thing there as well. So we've got the trend line, we've also got the 130 as well. So it's it's going to be tough here, and this will also line up with the S&P 500 as they'll follow those each other on the hourly chart, and in its own way, I guess it will sort of affect the Australian market too. Australian dollar at 105 is its main level here, which is the midpoint between $1 and 110, and support on the 105 would flip the bias to the upside at that stage. So support on 105 is a big deal. So anyway, this move down through, we were looking for wave 4 after this wave 3 here, and we've got wave 4 in here. The wave 4 would pull back 38.2% of the wave 3 here, and that's pretty much about right where it is here, 38.2 at the 144. So that should be a nice number to hold with. So allow it to retest the midpoint here, the 104.50, and as it does that, as it tests it, then you start building in a long trade, because that high over here should be taken out. Also, the wave 4 here, this being a correct, but there's a lot going on in here emotionally. There's profit taking. The stops being triggered out, the value buyers coming in, all sorts of things are occurring through here. But it does, in Richard Wyckoff's terms, create an accumulation pattern through here as well, and that becomes the bigger the correction, the safer the next trend. And this is a reasonably sized correction, so it's enough to get us. To the 105 there if you kept a square up time to price. So, yeah, but you still need to navigate subgroup 2 here, which is 65, 72 and the 80 through here. So just be aware of that there's going to be a problem at the 72 there. Okay, so like I mentioned earlier, is that, yes, the markets are positive, but they are facing big numbers, and that's currencies and global indices. So it's it's going to be sort of a bit of a static sort of market. It's only it will be driven by headline news, of course, of information coming out of Greece and also the US as well. So we'll keep an eye on those meetings and those dates because they will be the catalyst to push things up. And these pushes that come up, they will be sharp, and any bad news will be also sharp to the downside as well. So it's really a time to trade a bit less and be you got to pick your times when you trade. Alrighty, well. That's it. Yesterday I mentioned I'll be losing power here today between 9 a.m. and 3 p.m. So so I may not be able to answer emails. And the other thing too, I've mentioned last week, is that we're moving from Berry to the Blue Mountains, and that move we've just been doing the packing now. So yeah, we'll be moving over the weekend as such. So it shouldn't disrupt the service at all. Just the new section we put on the trading levels section that has never really been in full swing just yet, just sort of plodding around with it. But once we settle into the new place and the new year, then we'll bring that into play a bit more, and we'll also be having webinars next year as well in terms of just shooting the breeze with different markets, and yeah, so that should be quite enjoyable. Alrighty, well, good morning and good luck.